Hi guys, in this one we are going to dig a little deeper into framework indicator and especially on the breakouts. Those have been added into the latest updates, so it's now switching to version 1.4 of framework. And just as a quick reminder, if you want to know what version you are currently trading, you just go there and it's displayed right in here on the indicator's name. So if you're still version 1.3 or even lower than that, you simply just delete the indicator and add it again, and normally you should be switched to the newest versions. So this version 1.4 has been introducing the longer weighted breakout pattern, so meaning that now you no longer need sine wave. So sine wave's algorithms, they didn't disappear, it's just they got splitted in two ways. The sine wave patterns that was back then helping to trigger trading signals have been implemented right into momentum. So now the signals you have in here comes out of both sine wave and momentum patterns. So it's kind of a mix of those two. So sine wave didn't disappear at all. It's just been splitted and included into two other indicators. So sine wave signal algorithms are in there right now, starting from version 1.5, and we're now currently version 1.6 in momentum. We also have framework, which is now version 1.4, that is including the remaining part of sine wave, which were the breakups and breakdowns. And we're going to cover this up because the algorithms have been way more advanced than they were into sine wave. I've been working on this for almost 3 weeks from now, and I totally reviewed that indicator to just display those information with much better informations. At least that's the way I think. I will still obviously take your reviews in consideration. So if you think this is worse than the way it was before, and that you prefer the usual standard breakouts, then you just let me know. But I thought at some point it was too many informations on the charts, and now that framework is plotting a lot of informations, I just wanted the breakouts to be set in the background instead of the way they were before with big blue labels or red labels in front, in the middle of the chart. So I didn't want that, and I wanted something a lot more clearer instead, and this is what I've been opting for. So now you'll have 3 different breakouts, and they'll give you 3 different informations. It's still the same thing at the origin. It's a sine wave breakout, meaning the market isn't following standard cycle pricing. It should be pricing in cycle, and it isn't following those prices, those cycles, which gives a pretty reliable information, and that information can be different. So 3 different signals will signal 3 different informations out of the same source. Okay, so it's as usual. These are patterns. I mean, this is my job, to highlight patterns, to code those patterns so you guys can trade the way I will trade, and signals I will trade myself. But it's like having me watching over your back every time, because those algorithms are things I stand for. These are patterns that I trade in my day-to-day basis, but it's just like you no longer need to have me telling you what to do each and every second, because it's somehow the way I'm doing it, but in a different perspective. Instead of just telling you each and every second what I'm doing, you probably know what I'm doing because you're having my indicators that are using my algorithms, using my strategy with a semi-automated system, which means when I say I'm trading this because I see a momentum pattern, you should have that same pattern, so you should know what I'm doing in the market. Okay? So anyway, that's set apart. Straightforward to the essentials because I don't have that much time available right now. So the 3 different breakouts you'll have are those ones. You'll have little crosses in here, you can have little squares, and you'll have little diamonds. So these are the 3 types of breakouts you'll have. Obviously, when the cross is below prices, means bearish breakout of sine wave. When the information is set on top of prices, obviously the opposite way. Okay, so sine wave breakouts are normals. because if you just think it that way, the price will move in cycle, but cycles are like balance in market, and the market kind of seek for balance but never finds that. I mean, it's more like the market is trying to find balance through imbalance. So it's kind of a psychotic kind of view, but yes, that's the way it actually is in the market. The market is seeking balance by reaching and searching for imbalance more than that. So those breakouts are normal. It means the market tries to stabilize, but as we said, it will try to stabilize by destabilizing itself. So it will break cycles because it has to. Nothing can be cyclical forever. We'll have parts of the market which will be cyclical, hesitating, and we'll have part in when the market will want to destabilize to find new balance, either in different prices or just switch cycles, because the market hates to be predictable. Therefore, 3 different breakouts that will be not just. So if I had to explain what this is about, it's basically 3 different algorithms that will use the same input. First, we need to have a break in sine waves, and then a break of cycles, and then multiple patterns will trigger those 3 information. It's like when you have this exit, it's not just one pattern that is triggering this. You have approximately 17 patterns of exit, 17 bullish and 17 bearish. Approximately 25 for taking profit, if my memory is right in here. We've got 20 divergent patterns as well, and we've got probably more than 40 patterns of bullish and bearish, not to count for this. So this is what my indicators are about: many patterns, but giving simple informations to trade with. So in terms of breakouts, I didn't want to put 20 available informations, just 3 major informations out of many patterns as well. So first things first, the one you'll see more, you see them more often. There's ones, the crosses, which are called standard breaks. It's simple as that. It's just a clear, usual range breakout, which means in ranges, the market will change its pace just to fuck up some stupid traders or any other reason. But in a range, the market will try to concentrate prices in the middle of the range and will try to break cycles to reach out to boundaries, okay, to break cyclical activity, to suddenly reach out for an extreme price in ranges, interesting prices though, and then generally it will rapidly reverse out of that range boundary and try to get to the opposite one. And it will just keep on going with that sideways battle, trying to reach out for imbalance, and every time returning to balance price, the mid part of the range, the one you don't give a shit about, the dumb prices. What you want instead is those range boundary prices. And this is where those crosses will be interesting, because when you're reaching out price in unusual price activity, sine wave breakouts in ranges, those crosses will help you identifying probable areas for profit taking in those ranges. So probable boundaries of those ranges in which you can, as I said, either take profit or enter against or enter at the top or the bottom of the range. Of course, you don't trade just those crosses. You will require signals to trade with. You just absolutely don't trade that cross because you're trading at a cross level. Absolutely isn't going to be that case, but signal with a cross, probably highly suggesting you found a range boundary. So you can take those trades. Consider that as an additional information in the strategy. If prices are trading uninteresting prices, you're not trading in context or anything like that, then you just don't give a shit. Those signal doesn't mean anything. Okay, so for example, this signal doesn't mean anything unless you get to that price in a trend. And in that perspective, this will be a nice way for pullback. We're going to give you examples right after. All right, so range breakouts, this one will give you probably probable areas to forecast range extreme prices. All right, then you're going to get those ones. So you want to see a lot of those ones. You'll see far less of these guys in here, the little diamonds. These ones are the ones I call the reversal breakouts. It basically says those ones will generally happen right after a first breakout. So you've got first breakout and second breakout. That means that the market is trying to find balance in that area, consider that the first range breakout in here, so first range area. All right, that's the first range in which we were trading back then, and it tells you that, in here, that was the first probable range area. We had the target in here, the market went a little bit further, but that's the first range, adaptive range. And then we had a second one right after, breaking rapidly through that first range, speculative range. That generally suggests the market is giving some polarity to that range. It's giving you better odds for the market to keep on going bearish. What that means, the way I define those breakouts, I give a definition to them, is easy. When you see this and the prices reach out to there and retraces, meaning we have to stop there right now to activate that signal. Okay, that pattern is triggered. It goes 3 steps. Triggered, has to be validated, and in order to be validated, the market needs to reverse. Okay, so we need to reverse near that area. Doesn't need to be precisely at that price, but consider this as an area of action. So right now we're currently probably activating that pattern in SPX daily chart, and if we do activate that pattern, it says just one thing: we may retrace in here, but you've got strong market top built out there in which you can set stop losses. All right, it says you can set your stop loss on top of this price because of this. All right, purely and simply this. So when you have that, the information you have is that if we build a bottom in here, yes, we do have a range, okay, still remains that range, but any retracement in that range, and specifically those prices, okay, 61 to 76, are going to be very highly attractive for bearish entries. It means just one thing: when you do this, you're gonna polarize that range to a bear range. It gives you odds for the range to probably exit bearish, okay? And the odds that you can put stop losses in there, trade in there, and forecast the breakdown of that range, okay? I teach you guys to give a poll to your ranges, to try avoiding trading neutral ranges, that you need to prospect yourself into bullish ranges or bearish ranges to give odds and probabilities for that range to trade. When you have those signals, you'll have decent odds for those ranges to be exited by the bear side, okay? Obviously, when you got that signal on the opposite side, so if, for example, you had that signal in here, it would highly suggest this range is bullish polarized, all right? So right now you can polarize this thing to be a bearish range, but still range. Doesn't mean you have to break all the way through this. It's still a range target. It says the range is probably going to be extended in here, and if it is, and if the market reverses there, it's probably a bearish range that will be at play. It's probabilities. Doesn't mean it's 100% sure. Nothing is. But it's decent odds, and that's a pattern that works pretty damn well. I'm going to give you tricky information about this one later on. And finally, so this one, remember that it needs to validate the steps first, okay? It's something that requires validation. We need to reach out to the price and reverse near that area to confirm the range, okay? And if we confirm the range, then the odds are switching to bearish, all right? Now, moving on. The square ones. These ones are the trickiest ones to trade. So you got, for example, you got one square in here and you got 2 squares in there. I call them the stop targets, which means this is an algorithm that is going to study how prices behave inside existing ranges. So it's not something that triggers out of nothing. It's going to trigger inside ranges context. Okay, so when you're ranging, these things are coming from an algorithm that will try to forecast where traders will try to place stop losses. So you know that trends are generally triggering when one of the bulls or bears part of a range will fail. It's generally a trend comes out of your opponent's weaknesses. So a bullish breakup and a bullish trend generally comes out of strong weaknesses from the bears. It doesn't mean the bulls are that strong, but most of the trends are just because of weaknesses on other parts. So what that means is that the stop targets, when broke through, may generally trigger trends. All right, so that's what it says. So in here we've got a very complex information in terms of that range. It says we've been gathering stop losses in here. So bulls have been setting their stop losses in here. Bears have been setting their stop losses in there. So if we did this, we would have a nice probable trend breakup trade in here. As we broke through the lows with candle closes, and that's important, we may have a bearish trend ongoing right now. But the problem is we're still trading at that target, which is giving kind of a balance. We still don't know, but there is a high and very dense technical area in here. If we break through this, means that signal isn't validated, and this one takes it over, which means we fucked up the bulls and we're probably gonna bear a trend, because the bulls have been triggering stop losses, and if no one's is buying the bottom of that probable range, then there are no bulls anymore. No bulls, bearish trend probably gonna be at play. All right? Pure and simply this. So when you see those triangles, those rectangles, this is how you're going to trade, okay? It's not a tradable signal, it's just giving you informations of areas in which trend may probably trigger. Let's give another example in here. We've got another rectangle in here. How would you interpret that thing? So just put things in context back then. So we're going to just use the replay, because I hate doing things when you have the prices afterwards. So let's say, all right. The pattern is going to trigger, oh, damn it. All right, the patterns got triggered in here. The information it just gave you, when you see this, okay, what do? You don't trigger a trade. There's nothing to do. You just summarize informations you have, okay? No signals, so you shouldn't necessarily worry at that stage. We didn't have any selling signal. All we know is that if prices reach out there, the bears will probably try to save that price, okay? But first we have to trade that price. You don't expect things. You just, it's predictive algorithms, all right? It's pattern triggering. So you wait, no information. What you can do basically is just put an alert. You put an alert on that price, and the SPX, as long as it doesn't go there or there, is just purely ranging. So all of this is freaking dumb pricings. All those informations are giving you by that. Okay, all it says in here, if you summarize informations, if we go in here, bears will probably try as hard as they can to hold on the bearish sentiment in that market, but as long as they don't go here, we're not bottoming on that range, all right? So all those prices, uninteresting. Interesting prices to sell with a tight stop loss. Interesting prices to eventually buy with a large stop loss, okay? All right, here we go. Interesting. No selling signal, but we traded the target. All right, so bears are at play. We wait. We're going to get a signal. No, nothing to trade. Remember one thing. Those targets are not trade signals, just informations that can add up on top of other informations to trigger a trading signal. So consider this as risk management. All right, still no signals. Okay, and oh gosh, what the hell's happening in here? Bears are tried in here. Didn't trigger a trade for us. No, not enough risk management. But the bears did fight for that level, and now they're fucked up. This is a breakout candle close. I would suggest something isn't doing right. In here is probably somehow a trending attempt. All right. What it says that the bears try to fight. They got fucked up. No bears, probably a bullish trend to trigger. So I would say in here you're not trading bearish until you get at least to the context. So the next information you have in here, as long as you're not trading on top of context, you don't do anything. And if the market fucks up the context, meaning it's going to trend. Normally in here we shouldn't. You know that the trend trade was in here. Okay, first trend trade, so in here is probably the wave 5, but you know that we're probably going to try to trend to there. All right, so in here you know that you wait for that to play its game. All right, pull back. We've been fucking up the bears. I would suggest you buy in here. We got the divergence signal. You got everything you need. You buy in here and you put a stop loss below the previous low. So it's a tight stop loss. Very interesting for a buying entry to target that area. All right. We're getting in there. Do you see this? We have a target, so we put an alert in here. This is an interesting price. We got no signals to trade in the expected area, so we don't trade. We wait for further informations. Alright, still trending, still no signal. Squeezing pattern, that's interesting. So I would say in here, you lock on the gains. You've been buying in here. I would say you rise the stop loss on top of previous lows, because if the squeeze happens to the downside, you want to take your gains and get the fuck out, and even reverse in here. Alright, so just let it go, you wait. Alright, we're trying to break up. We're reaching to the target. So that is where the interesting part starts to get. Okay, in here you got a pretty interesting signals. Now, this is what I teach you guys to do. Summing up informations to make a rational decision. Price okay, but extreme price. So you should be aware of what's happening on the bigger time frame. So you should just have a look at the weekly chart in here, but in there, weekly chart was bearish as well. So we're going to just skip to the essentials. Momentum okay, squeezing pattern, and sine wave okay. So what do you do in here? First thing first, you get the fuck out of the bullish trade. You take your profits. I suggest you take a bearish entry, but the squeezing pattern says you have to put a very large stop loss. So I would say you try to dip a toe in here. Bulls are probably profit taking at an interesting price area in a probable wave 5 structure. So I suggest you take a first bearish entry, but large stop loss in here. All right? And we go out. All right, market's retracing, and it's going higher, triggering an exit pattern exactly at the target. Exit is more than just profit taking. This time we have no squeeze. We just got the extreme price. I would say you double down. You reinforce the bearish position and you lower the stop loss. Same risk, but bigger position sizing. All right. Okay, we're good. We're good. What do you see? Range target. No signal. So what do? You put the stop loss just at the market top. You reduce the risk, but you just let it go. Oh, good. We're going below this. That's great. All right. What do we do next? Waiting for informations. Oh, cool. Pretty damn fucking cool. Now you've got this. What you do is that you put the damn fucking range, and you know that in here, what you're going to do is this. If prices gets to validate, okay, which means in there you put the range strategy at play. And this is how you're going to do. Okay, no more. Sorry, not that. Not yet. First, at that stage, you do nothing. All right, you're about to trading the range, so you just wait for further information. You got nothing to do, but this is good for you. It means that if we go there, probably gives a sense of bearishness to that range. So pretty decent odds for a nice reversal and a bearish trend to occur afterwards. Okay, we're oversold. Price okay. Momentum, sine wave. What do you do in here? First, profit taking. I would suggest in a range, either you take it all or you just take 50% off the table. That depends on you. But in here, obviously, there was something to do. We were trading below the context, so purely a range strategy. Divergence right now is adding on top of this. All right, we'll retrace. Fine. Okay, nothing to deal with. Okay, good. Now we've got bulls trying to support prices and gathering their stop losses below those lows. So you don't trade that without a bullish signal. Okay, it's just a sine wave. Okay, so just a sine wave cycle. Okay, fuck it. Now the bears are fighting for that level as well, so we're compressing in the range. We're in ranges, so informations are important, but no trading without signals. Okay, no bearish signal in here. Nothing. Oh, kind of interesting. First candle closed below there, but we still didn't close below the previous lower shadow candle, so I would suggest this is not trending. This is hesitation. Okay, this could be trending. We broke through. We clearly broke through this. All right, so the information that's been given on that specific candle is the risk for us to go crazy bearish, what we've been talking about earlier. But the thing is that we still have that level to test. So this is why what we're having right now is pretty damn freaking interesting. Because for many reasons, previous days in here. So this is Fed day, all right? We had crazy volatile, and in here we just got oversold cluster, all right? Oversold. We're waiting right now for a potential sine wave to validate, which means if today for some reasons we're getting up here with the SPX, I would just say we made the excess to test that price. It's no bearish, it's just bottom of a range. The market will fuck up everyone who's been trying to trade this trending. I'm just going to retrace, but that range will be bearish biased. All right? Purely and simply this. Now let's make another example. I'm just going to try to pick something I just don't know about, because some of you guys will tell, you know what's been happening on the SPX, so it's a little bit too easy to do this. So let's try analyzing something I haven't been analyzing already with those tools. The cryptocurrencies, yes, because that'd be good. Many of you guys don't kind of like the cryptocurrencies. So no, I've done this one with the French user. So let's make BTCUSD, for example. What are the informations I have on BTCUSD recently? I'm going to take a daily chart, and you'll see what those informations were, how they could have helped you back then. Oh gosh, I mean, look at that. It really, really is giving you so many reliable informations. Bullish bias, so all this suggests a trend is at play. I mean, freaking hell. Yeah. I'm not saying I'm a genius, but of course those indicators won't be assessing every trade. Lots of signals will not be shown, will not be detected. Some signals will be wrong footing signals. But most of them will just work pretty damn fine. In here, stop losses. What are we doing when we overcome that level? We're accelerating and we're trending. All right, trending after this. Signal in here. The market is trading this, slightly overcoming, but I would suggest this is pretty damn valid. So we've got a range happening in here. Oh, it would be in here. We try to break up, fail. Stop losses accumulating, fucking them up. And once again, what's happening in here, you can take those trades, breakdown trades, but these ones are kind of trendy, so you're just trying to trigger a trend in here. But it isn't working. We're on the opposite side of a major trend. All right, so you're getting in here, you've got odds that this range is going to be bullish, so what do? Any retracement in that range is tradable with a stop loss in here, because that low is probably a solid low that you can secure your trades below to. All right, you're taking that trade, exiting the range, so bullish trend. If you don't know already, you've got another bears fight in here. Same thing, the bears are fighting. What do we do when we fuck them up? We trend. It's simple as that. So trending in here, trending all the way through. First target in here, we got off shells in there, no signals to trade. You do nothing in here. Second break up in here, no signals, but we do have overbought cluster in here. Right? No. Where did the overbought cluster trigger? What the fuck? That candle? That isn't normal. Alright, so we do have a signal actually. We do have a signal in here, so you would have profit taken in there. You would have trend secure and locked on your gain in here. You wouldn't have caught the top, of course, because this is not normal pricing and those indicators are not meant to detect those kinds of things. But you would have still locked on the gains in here because of that overbought pattern near that target. What information those breakdowns will have gave you? The pretty damn freaking perfect low in here. Stop losses in there traded. Okay, so when you have this stop losses and reverses, means of course bears are in control, and you could put stop losses in here. Okay, bear trend, when you've got this, you know you can secure and lock on your gains in there. Oh gosh, I mean, these are algorithms. This is not prepared and meant to analyze just Bitcoin. It's analyzing everything. It's no magical, but it's working just damn great in here. Same thing goes there. Tradable prices, tradable signal, stop losses in between, stop losses below, and in here, both bulls and bears are trying to fight the same prices. All right, we've got no odds. We don't know in here if the market is bullish, bearish. Back then, we were trading a crash, so I was favoring the bearish. We had another target in here. The market didn't fill this one, and what happened when we try to get there? Oh gosh, I mean, that isn't complicated. We tried a trend in here, the target was in there. Okay, so in here I remind you, I got fucked up in here. I didn't imagine the market to be bullish in here. I thought the market would just go there. That was my targets back then, and that was absolutely normal. The market wrong-footed this, but did it break the previous highs? Absolutely not. All right, and so far we have no information. We had a range breakout attempt in here, all right, and the market fucked it up, but didn't trigger the diamond. So we're not bearish in here. We just extended the range and waited for the next breakdown. Next breakdown, profit-taking structure. We're reversing. I mean, that's not that complex. All right, so in here we're still ranging. The latest information we have is that we're ranging in there. Okay, you take the candle closes, not the weeks. So this is what we're doing right here. So I would suggest next target for Bitcoin is slightly higher than what we're currently trading, 4,300. And we have to have a bearish signal in there, because if we don't, we're just going to fuck up that range. And what I strongly think that we're going to do in the Bitcoins right now, in a day-to-day basis, is just we're going to oscillate in here, accumulate, and fuck up the bears. All right? So this is what I think. I don't know how long this accumulation in here will be necessary. I don't even know if we're gonna stop on that range, because to me we've been crazy far, a lot further than necessary. So we've gone that far. Do we need to trade that range? I don't think so. This is a stupid range. We could just fuck it up instantly and not even talking about that. All right, but I suggest we kind of mark the range and double it to the upside. So to me, next target is when we double that range to the upside. All right, kind of a bottom structure, extension. We could just make a head and shoulder pattern in here. I don't know how and what the reversal, what it will look like, but we can just do this, head and shoulder, and we'll break it up. All I care about is for us to go there on Bitcoins, because that's the last technical level we have. We've been trapping some bulls in here, so we might have some bear demand. So I would suggest, yes, this is the next tradable price for Bitcoin. Because, and I'm going to set things really straight. Why don't you sell in here anyway? There is an information in here. If you're applying the strategy, why don't you sell in here your Bitcoins? Just one reason. I give you a few seconds to reflect, to think about it. If you have this answer, you're really good at applying the strategy. If you don't, then you may learn something today, because that's one of the core rules of the strategy that you need to know if you want to trade, and you should never break if you are trading with my strategy. You never sell below the 50% channel. You never buy. You never buy in here, and you never. Oh God damn it! You never buy in here. So the only area in which you can sell is the top 50% of the trend channel. The only area which you could buy and no selling is the lower 50%. So there's no selling in there. Minimum selling is on top of that level. So why are we probably gonna overcome that range and probably reach out to the trend channel next? For that reason, because no matter how, no matter what, if ever a signal shows up in here, it has to break that level, at least on top of 4,400, 500 to be honest. So at least as long as we're remaining there, as long as we don't get to at least 4,500, and we have to trigger a bearish signal in there. If we do, it's probably going to be a bearish divergence. All right, which means bearish divergence are potential signal. So what it says is that if we fail in here and if we go back to support, then we're probably going to go lower. But if we just go in here, put the momentum back to zero without losing momentum, next wave is going to be bullish. We're going to break the range. And I still tend to believe that there is absolutely no reason to sell your Bitcoins right now, at least not to those who've been making the buy and hold scenarios, because we're trading daily chart, at least not to say weekly charts, and nothing suggests you should be buying or selling in here. Just do nothing, watching for prices, and let the time do its job. I'm trading weekly chart. Just look at how good this weekly candle looks like. We've been waiting for this. Now that it's there, you want to sell. I mean, god damn it, what's wrong with you guys? It's just how simple that is. Your freaking triple signal in here, you're right into the expected area, we're below context, so this is pure and simply a damn buying signal in a weekly chart. This is what I wanted to confirm this thing to be a bottom. So I think we're bottoming in here in the cryptocurrency sector and mostly in Bitcoins. And now I see every fucking body saying we should sell because we're going to go lower. I mean, fuck it. If this week's candles closes like that, obviously we're far from weekly close, but if we do close like that, that's the damn confirmation signal I was waiting for. Bullish signal, so requires confirmation by candle close, but if we do close that way, we've got it. All right, that's simple as that. Means we can lower shadow lower than that, but in a weekly perspective, to me, the battle is already won by bulls. It will be just a matter of time for us to retrace back to 6,200. It can take months, can take years, I don't give a shit. All I know is that right now, the risk to buy is nearly zero. Nearly. Doesn't say it isn't going. It is obviously going to work. All I'm saying is that the risk for us to go crazy bearish at that point are very narrow. But we need to close the week like that, which is pretty not the case. So wait for the candle close first to make sure that this information is tradable. And if it is, then buy and holders will be safer than ever before. Now we've got a damn weekly signal to trade. We never had that. I mean, that's the weekly chart signal. The latest signal the bulls had was in here. You figure this out. Really, last time it was a buy call was October 2014. So yes, I think we got something pretty reliable to trade if it holds the candle close. And certainly not something you want to sell. All right, guys? For those who are buying and holding, those who are trading intraday trades and everything like that, you manage the risk on your local time frames. Weekly chart, damn freaking bullish, and we got everything we needed. And obviously no selling until you get to 50%, which is currently 7,500. So all the buy and holders, this is the price you want to profit take, and nothing below there. All right? You just wait. These things will obviously turn down each and every month, so at the end of that year we're going to go down one more step, but that's all we'll do. Will probably means we're selling at 7,000 but not below. So wait for this to come. If you are not applying the strategy, or if you're trading with my indicators and not applying the strategy rules, you and I have a problem. Simple as that. I give you rules to follow to take the best advantage of those indicators. It's up to you to follow those rules or to break those rules. But if you break them, obviously it means you have higher level of problem heading into. And if you basically just follow the plan, follow the rules, generally you're just going to trade like me. Obviously you don't have as much experience as I do, meaning you're going to make more mistakes than I do. But normally you should be safe trading, a lot safer than what you were trading back then. All right? So, that being said, that's the last one before Christmas, obviously. So I wish you guys all a Merry, Merry Christmas. As I previously stated, don't forget to spend time with your friends and family. That's why those holidays are meant for. And if we can't talk again each other before the end of that year, Happy New Year as well. But I still think we're going to have probably one opportunity in between. Bye guys, trade safe, and just final advice, as you will start using those things that you still don't master, obviously that's new to you and to me, so when you're trading using those informations, okay, I suggest you lower the leverage for many reasons. First, we've got volatility in the markets right now, so reducing the leverage makes sense by itself, all by itself, but I suggest using new informations may introduce some doubts and things like that, negative things. So when you are enduring the learning process, I suggest you just lower the leverage a bit, just to make sure that if you make a mistake, it's going to cost you less than a normal trade. And then if things are just fine 1 week from now, and if you don't feel any difference using these indicators on top of what you were using before, then I think you're good to return to normal leverage, but consider just that as a necessary security management. All right? Bye guys, and once again, happy holidays and Merry Christmas.